Let's start off on the local data front because higher producer price inflation yesterday seems to have led to a fall in interest rate cut expectations.
Morning, Alishia. Well, let me just start by saying a very happy birthday to you. And then with reference to the PPI, yes, it does look like the market has trimmed its expectations of an early rate cut that had been mounting before the inflation data came out this week. So we had CPI surprising to the upside and then PPI surprising quite dramatically to the upside for the second month in a row. So quite clearly, the market is now no longer as certain about the possibility of an early rate cut. We stand by our initial prediction that the SARB is only likely to move on interest rates in the third quarter of next year, and then we're expecting a rate hike and not necessarily a rate cut. But of course, a lot of it is dependent on the outlook for the global economy, and at the moment, things still quite shaky on that front.
We had the IMF in that context come out with comments, and we touched on it a little bit ahead of the break, just saying that, the country faces significant downside risk from the slowdown in the developed world and favors waiting for clear evidence of a more pronounced increase in core inflation or inflation expectations before, seeing a rise on that policy, on that rate front moving forward. So certainly there's a consensus within a global arena at this stage.
Well, certainly I think so. I think the IMF's comments were slightly misinterpreted. I think most people saw them as being quite hawkish, but really what they were saying is just what you've alluded to, that the Reserve Bank should hold off on raising rates or making any changes to the key interest rate until we see firm evidence of a rise in core inflation. And they were just cautioning, however, that of course as inflation rises, that could feed into inflation expectations. Higher inflation expectations could then feed into higher wage settlements or higher demand as far as wages are concerned, and that of course could then feed into a rise in core inflation, but such a process would take time. So I think they were merely flagging that as being a risk factor. And what was also surprising about the IMF's comments is that they see South Africa's GDP growth expanding by 4% this year and then accelerating into 2012, and that's at odds with most other forecasters. Standard Bank sees growth decelerating next year to 3.4%, and for this year both the National Treasury and the Reserve Bank have quite pessimistic forecasts. They see growth coming in at below 4%. And we also had Reserve Bank Deputy Governor Kganyago saying that in fact the Reserve Bank may look to downgrade its forecast for South Africa's growth this year. They'd initially penciled in a rate of 3.7%, but they may have to adjust that downwards, of course, as we enter this soft patch.
Of course, over in the US, the likelihood of additional stimulus coming to the fore is fading on that front as well. And I'm going to read from an RMB commentary this morning saying that an important differentiating factor is that the US inflationary picture is significantly different right now than it was in 2010. 2010, we had prices falling. US core inflation is now on the rise. And moreover, we've had the failure of QE1 and QE2 to contend with. And that's really raised doubt about the effectiveness of additional asset purchases. This is certainly a scenario that's supportive of the rand. How are you reading that kind of commentary that's out there and the likely implications for the local unit itself?
Well, certainly Bernanke's speech today is the highlight of the Jackson Hole conference. Probably is going to be the most important bit of data that comes out today. Everyone, of course, is expecting, or the big part of market participants are expecting him to say something, not necessarily QE3, but to announce some measures to come to the help of the US economy, because as we know, the government is certainly not in a position to assist any longer. Fiscal balance is stretched far enough. Having said that, it does look like the odds are stacked against further QE3, and in that scenario, should he not announce that, should he not announce any other monetary stimulus, and should he give a downbeat assessment of the US economy, then we could of course see a sell-off in risky assets, and we would expect the rand to be particularly affected. So if we break through the 733 level, then we would be looking for the rand to move as far as 750 should all of those events materialize today.